What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 12th of 2019. Well, folks, I hope you all are having a great day wherever you are, and today we have got a vast range of different data and information to go through for crypto and traditional markets, as you can probably see from the tabs. So I'm going to refrain from detailing everything today and just dive right into it. Before we get started, though, I want to let you all know that the sponsor for today's video is Yellow. If you haven't checked out their YouTube channel, definitely go over and subscribe to their channel. And along with that as well, if you guys can make it, I'm going to be speaking at Tokenomics in Bangkok in Thailand later this month. So if you guys can make it, definitely check out the discounted code down below. I hope to see you guys there, and you should definitely get excited that Mika Matsumura is coming. He's one of my favorite speakers in the space, so he's going to be speaking at the conference. So if you guys can make it, would love to see you there. Alrighty, so let's go ahead and dive into the market analysis for crypto. Markets are relatively unchanged. Volatility is quite low ever since the rally we saw, and it looks like for the bulls that there is a little bit of positivity in the case that Bitcoin and cryptocurrencies have actually held the majority of their gains in general and have slowly just tethered off some, which is very similar to the pattern we see in a bull flag. Now, I'm not confident, I'm not to the level of confidence to call it a bull flag just yet, but we are definitely still holding that formation. We'll talk a little bit more about what we need to see for that to be confirmed when we do the TA segment. Outside of that, though, in regards to market movement, BitTorrent continuing to move higher. BNB just hit its all-time high comparative to Bitcoin in anticipation for the decentralized exchange, and also the fact that it's one of the major pairs for BitTorrent and a lot of these other cryptocurrencies. So again, we're still seeing a little bit of sparse speculation, but I'm not at the point where I'm extremely confident just yet in markets, and I'll explain why. So the other day, we had about a $10 billion increase in market capitalization, which was nice to see. It was relieving to a degree, and it also wiped away some of the losses we had from late January all throughout February. So this is good to see, but at the same time, as I've told you all before, I still think we're on the page of testing $100 billion. And the reason I say that is because we want to see a solid overall market double bottom. In a market where Bitcoin now only holds 30% dominance. Well, in this case, that we're quite higher, but during some of the altcoin cycles when we started to see Bitcoin dominance at around 33%, now we're at a point where the market is much larger than just Bitcoin. And on a fundamental level, Bitcoin is still one of the strongest cryptocurrencies. And in fact, I'd say probably it is in the sense of network security. That all being realized, I think that it's important we see this larger indicator come to a very big even, like 100 billion. It would be good for investors to get more confident in this case. I like as well that we're seeing on Bitcoin dominance lower highs each time. Again, we made a low high here around 53.5. And I even think that we have a chance to potentially see a slightly higher level, like 54%. But no matter what, guys, in this case, we're at the point where I'm starting to expect that altcoin dominance is going to start to grow because we've been making lower highs each and every time, which is not good to see. It's not a good sign for Bitcoin dominance in this case. Alrighty, so let's go ahead and talk about Bitcoin. So why do I believe in this case, we're going to come down and test that $100 billion figure? And is it plausible here? Well, I think it is, because you've got just a few $100s before you come down and test this previous low down here. Not to mention we're seeing continuous resistance here. Now, for those who potentially believe we might be in a flag, as I talked about, well, you've got a nice set of hourly price action here. For example, you've got a set of lowering highs here, obviously. You got a set of lowering lows here. So basically a bull flag, to keep it simple, guys, some people believe that you need to have a direct channel of lower highs and lower lows. And we are getting that here, which is good to see. But more than anything, it's basically a bolster in price, a lot of momentum and volume coming in, and then making sure it holds the majority of these gains. And once you break out, for example, past the line of resistance, usually it's where more price action can come in, where it can start to move higher. But again, one thing I want to mention, even though everything's setting up, you've got the high volume here on the buy side, relatively low sell side volume. I would say that I'm going to need to see a good breakout above 3,600 in this case before I really get confident that this is moving higher. And I need to see volume coming behind it. So it's easy to spot these things, guys. It's just a matter of patience here, waiting for those big evens to break and waiting for the volume to actually come in to supply that rally. Because if you don't have the volume, it's not going to happen. It's going to fade very quickly. So in this case, RSI on the daily is not overbought. But again, I have a high belief, guys, that we've gotten hit down this time, and this time. Not to mention, we still have not been able to get over the 50-day moving average. And the volume in this market is abysmal. So we got to take what we can get. And in this case, we've had a nice little bump here over the past few days. The question of whether or not we can get over that at the point, at this point, I really don't think we have enough fundamentals at the moment. So that's one thing I'm a little worried about, is the lack of volume. Even though the RSI is not overbought, we just can't get over some of these very simple technical indicators, which signals that markets may not be ready just yet, and they may be looking for a double bottom. That's what at least I'm getting from it. So I'd like to know what you guys think down below in the comments. All right, so going on here to take a look over the big news here, and that is Binance's decentralized exchange. Whether you like Binance or not, it is a relatively big deal in this quiet market at the moment. They are building on a decentralized exchange that's going to allow people to, obviously, as DEXs do, manage your own funds, and in this case as well, connect to a variety of hardware wallets, as we'll take a look at in just a moment, and actually become your own bank, but at the same time be able to exchange. And this is quite exciting stuff. I like to see that a company like Binance is actually trying to build a DEX. I don't know the quality of it at the moment. We'll have to actually see when it launches. And I'll be fair, more than anything, I fear the biggest thing is that people aren't going to use it, just simply because people like having a trusted third party in the middle. And in this case, where they have a trusted third party, I'll get to my point here. I know it might sound kind of backwards. With a trusted third party, you have someone to blame if there is a mismanagement of custodial funds, or custody of funds in this case. So, and not to mention as well, sometimes probably higher transaction throughput in that case as well for people who have algorithms trading. But it's supposedly, in the article here, they basically said that not only they've been testing it out and integrating it with hardware wallets like the Nano S, the Nano X, and the Trezor and KeepKey, which is a good range of hardware wallets for the cryptocurrency space. But along with that as well, that they're going to set a few high standards here. They've not only had a high amount of throughput trading on the exchange with low latency, but along with that, they're going to have a listing fee to keep out spam or scam tokens in this case. So unlike a lot of DEXs that get crowded, I can give you an example. IDEX, for example, which is one that I've used personally before. IDEX gets spammed like crazy, with a crap ton of ERC20 tokens, and there's really no filtering on it. Well, in this case, Binance is going to set this listing fee. Now, some people might say this is ridiculous. They might say that, there's some projects that don't have all this ICO money and they want to get on the exchange. I've heard rumors that Binance will waiver this if you actually propose a decent technology, you've got decent community backing, and you're not an outright scam. They will usually waiver this and try to find some middle ground in between. But they are a business as well. And the other thing as well that is bringing a lot of speculative value to BNB, and why I think it reached its all-time high, is because Binance coin on the Binance chain is same to Ethereum coin on the Ethereum chain. It is going to be used as gas. So for transactions in this case, for people to do transactions over this decentralized exchange, they are going to need BNB, which does set some demand. But I'll be fair, guys. I don't think it's going to set any substantial amount just yet, not until we're in a bull market and when we see people actually using this. I think more than anything, the value increase that we've seen is pure speculation right now. Obviously, it is pure speculation because the exchange hasn't been open yet. But sounds like it's going to be starting here relatively soon, so it will be interesting to see if people actually start using it. And as CZ mentions in this, everything is going to be transparent. It's on a chain in this case, so we're going to be able to see whether or not transactions are actually coming through, and if people are actually using the system. So I wish all the best. Again, there's some pros to Binance and some cons to it, but I'm glad to see an exchange actually trying to build out a DEX in this case and giving people the opportunity to manage their own funds. Alrighty, so one thing I saw on Reddit just a little while ago is this big picture about Segway transactions reaching 60%. Supposedly on this website, the source that they have, I think it's segway.space, supposedly the indicator messed up here. We don't actually have 60%, but I thought it would be a really good time to talk about Segway adoption, guys, and take a look at the percentage of transactions that are Segway. Now, we've seen a slight decline here from October in this case, downwards towards February. And I'm curious as to what's actually caused that, seeing as exchanges make up the majority of transactions here, real transactions in this case, moving them. And I think that they have an incentive, a direct incentive to adopt Segway over time. But just to admire how much we've actually grown in Segway, it's really good to see for Bitcoin, in my opinion, that we've actually gotten to this point where we almost have 50% adoption. And I think it's only going to continue to grow into 2019 and 2020. So again, good to see this. It means lower fees, means more efficient blocks, and always been a fan of Segway in this case. That's why I think it's exciting to actually see it getting adopted. Alrighty, so let's go ahead and take a look at traditional markets, guys, because as I mentioned, we have got lots of data to go through. And we'll also be not only diving through just generally equities and the housing market, but we've also got to take a look at equities, and we'll also be talking about the cannabis space at the moment and where I think we're heading over the next few weeks. So right now we have the record fixed income inflows in the United States, responding to a variety of fear across the board in global markets for global equities. This is obviously due to the fact that people feel global slowdowns coming through, not to mention we already have entered into a recession in a few areas of the world, and global equity markets are, down 20-25% from their highs, whereas the US has actually held probably the strongest out of most. If we take a look here, one of the big highlights I have here is that German bond yields are at a 2-year low. And as people are willing to accept a lower interest rate on the bonds, usually signals that people are willing to, there's very high demand for it, right? If there's not a high demand for debt, then rates are usually going to be higher in this case, right? Because you need to have an appetite for people to lend out capital for bonds or to purchase bonds in this case. So again, big thing here, I think this is a big data point to keep into mind here, but there's a variety of other things as well. For example, the massive amount of cash that's actually sitting on balance sheets right now and is not entering into markets. In fact, we've been seeing mass exits of cash outflows from equities. Now, if you go through the article here, we can see that not only it's been the largest net cash investment in over 10 years in this case, since we've seen 2009 in the financial crisis. But I want to go ahead and take a look at a really nice chart here. You can see here, we'll go ahead and expand this one first. You can see that cash is one of the biggest positions, and not to mention just cash, but you're seeing the Great British Pound. You're seeing money go into oversold emerging markets, discretionary, healthcare, but also some very safe plays like bonds as well, and in Japan and the United States. So this is interesting to see that cash is playing such a large role, but this chart right here is my favorite, and I have it opened up here. And as we were talking about, this is the biggest amount of cash outflow since 2009. So this provides some perspective. We're reaching some of the high points here, like we saw in 2016 and the sell-off in 2018, and are actually making higher levels. If this continues, if we get up into this range, I think this is going to signal that the rally we've seen at the moment is short-term and that we're going to continue turning over. But I think it has to do heavily with Federal Reserve monetary policy. Whether or not it falls back with the world and saying, hey, we're going to keep boosting up the balance sheet, we're going to lower interest rates, or just putting things on hold, right? That provides a lot of relief instead of increasing things. It's going to definitely provide incentive for people to dabble in equities and reevaluate the risk to reward profile. So very interesting stuff there. Hopefully you can keep an eye on this. The source is down here as well. Going on though, the Bank of England's leader of the central bank, the CBOE, Carney has actually said that he supposedly sees that we're in a delicate equilibrium as the world economy slows. So this is something that I actually, in a sense, do kind of agree with. I usually don't find myself agreeing with Carney, but the one thing that he's basically saying, and I think it was very much signaled as we just referred to with the Federal Reserve reversing its hawkish kind of mentality of continuing to raise rates and emptying off the balance sheet on autopilot. We've now started to see that the world economy is quite not only interconnected, but we all are following very similar tracks of monetary policy with some slight variations, with Japan and China increasing their balance sheets. We're just simply, continuing to taper off the balance sheet and, keeping rates flat, at least in regards to the last FOMC meeting. But I don't like, for example, that he's blaming it on very arbitrary things. He's blaming it on China and the China trade, in this case, the negotiations that the U.S. and China are having. He's blaming it on protectionism in this case. Very, very important things, I'd say, that could have an effect on some global data points and trade figures. But I don't think that's really it, guys. Right? At the moment, there is still plenty of business going on between international companies. People are just paying tariffs on top of it, right? It's kind of I know many people who are libertarians and economists would say that tariffs are a hidden tax in a sense, right? It's on the products or goods and services, so we're paying a little bit more for the goods we deal with. But we're still doing trade. So I don't think that that's anything that's actually tapering off growth in China. What actually is causing this was a reversal of monetary policy. The global balance sheet starting to decrease. The global interest rates starting to see more rises than either keeping them stagnant or lowering. So I think that's the real point here to take into account. We'll go ahead and take a look at a quote here. Given the confluence of the current broad-based slowdown and outstanding downside risks, some are beginning to wonder whether the global expansion, begun in 2010, can be starting to end. And guys, I don't think it's rocket science. We are overdue for a recession. Usually we have these every 6 to 7 years, but we have had a very, very interesting, experiment with monetary policy, which has allowed this to extend a little bit further. And one thing as well that this has really got me thinking about, I actually just heard about the terminology a few weeks back, is modern monetary theory. And this has gotten a lot of people saying that all of this is normal. The central bank activity that's been going on is normal. And I actually want to do a video on modern monetary theory. If you guys would be interested in that, if you look into it, or if you haven't heard about it before, I recommend you check into it. And let me know what you think, because I'm a critic of it, but at the same time, I see the points that they're driving home, but I think they're missing some of the key data, and especially in tied with the objectives of those who support modern monetary theory. So maybe we can talk about that sometime in the future. But that's pretty much what we've been doing for the past few years, which is just governments continuing to borrow and print money. Alrighty, so let's go ahead here and take a look at the housing market. Now, this data right here is from December. We're waiting for the January, and obviously we're in the middle of February, so we can't see it just yet. We're waiting for the February and January data. But at the moment, we can see clearly that the housing market is starting to see a dramatic sell-off. So pending home sales has to do with homes that have been previously lived in this case, or actually previously owned homes in the U.S. We've slumped down at 10%. If we take a look, the past 10 years, we're really starting to diverge off the trend here. It was just a few downward months here of slow, stagnant decline, but now we're actually starting to pick up pace. And I'm interested to see what happens on January. Not to mention, keeps telling me I want to set up notifications. This is at the same time when mortgage rates are starting to decline. So this was in response. The financial sector had to decline mortgage rates. And the reason being is because people weren't paying 5+% on their mortgage rates. They just can't do it in this market with the prices where they're at. And, borrowing that kind of capital at that rate. Now, that's not a ridiculous rate. It used to be back in the day that people could actually pay that. But nowadays, the economy is so weak and debt burdens are so high that people can't do that. The only people buying homes at the moment are people making investments in, properties in this case, who are just literally doing it as an investment and trying to rent out to other individuals. So people having a hard time even just renting, they're not going to be going out and paying 5% on a mortgage. I mean, come on, it's not rocket science. Going on here as well, another thing I want to talk about is the unemployment rate. Now, we saw a quick bump up here in the later part of 2018, in December. And there's a very important thing to take away from this. If we start to see unemployment bounce around the 4.5% range, I'm going to be very confident that we're entering into a real recession in this case. Because I hate to say it, guys. It's so nice to see, even though we know the unemployment numbers are manipulated to some degree, as GDP is manipulated in China, and all kinds of different data points can be skewed in a sense. The thing that I always take away from this indicator, these really good indicators, it's when it's good to see that unemployment's going down. The fact of the matter is that when unemployment reaches down to historical lows, when it reaches back to historical paired levels at the peak of rallies and the peak of market euphoria, it is usually a contrarian indicator to signal that the markets are set to go down very soon. And in this case, you can see unemployment comes back spiking, right? So when we see that curve and trend, when we get above, say, 4.5%, be warned, guys. That's not to mention, again, as we mentioned, the data is a little bit manipulated, so it would mean the number's a little bit higher. And this isn't something new, guys. This has been around for decades. You can obviously see that when we get around this range of around 4%, it's usually a contrarian indicator to signal, okay, the show's over, things are going to go worse. And that it sucks, but it's something to take into account. So if you guys ever want to get some of these data points as well, it's just fun to look through. Check out Trading Economics. It's a really cool site. This is what I use for all of the housing data and things of that sort, and the unemployment rate we're looking at. So going on, let's go ahead and take a look over the cannabis space. Now, I talked back a few weeks ago. Actually, I apologize, not a few weeks ago, just about a week ago in this case. about the cannabis space. And as we were approaching 100 here on the chart, I said to be careful and wary in this case because it's one of those big evens. And I think during the day, the index actually reached 100, but it actually takes the close here on the last price of the day. So we actually started to taper off here. And now we're starting to go lower. Now, when we were talking on our newsletter, actually, sorry, I got the chart right here. When we were talking about Chronos on my newsletter, this was one of the first actual short plays we talked about. Now, I don't incentivize anyone to go long or short. I just mentioned, this is what I would do at this price range. It's what's on my mind. But I talked about anywhere between the $24 to $25 price range that it was time to go short on Chronos. And take a look at this, guys. We called the top pretty much perfectly on it. I was very happy that that was my estimated range because we were not only getting dramatically overbought in the RSI, but price action was moving parabolic. And when you can obviously spot parabolic price action, the first thing you want to look for is a shooting star. And this is what we got right here, where basically price has a long extended wicks and a thin candle at the bottom. And from there, we have continued to decline from the lower $20 range and now are breaking below 20. And pre-market, I think, is actually showing that Chronos is down a little bit more, but nothing dramatic right now. It's just about 1 or 2%. So I think you're going to see this come back down here to 1386. Not only making support on previous resistance possibly for the bulls, but also coming down to this very key channel here where price was traveling for quite some time. So in the cannabis space right now, guys, I don't have any specific plays that I like. A lot of these companies don't have fundamentals or anything to substantiate the valuations they have. That being realized, I do see value in the speculative nature of this, and I'm going to be waiting for the index more than anything to come down back to the 60-point level. So not that far away. We came up here very quickly, and I think we're going to bottom here multiple times. As you can see, this was the base before the major rally. Very similar to what we expect with cryptocurrencies, right? With the overall valuations at around 100 billion. So that's what I'm looking for. Same with like Cannabis Growth Corp. Again, I think we're going to come back down to probably a more substantial level. It looks like there's a general uptrend here, but I would say, again, I'm looking more between the $28 to $32 range. I'm not buying it up here. And not to mention, we've exited out of the overbought range, and now we're starting to move downward. And I want to see this hit the oversold range. So that's it for cannabis stocks. We'll take a look real quickly over equities. Markets have not opened yet. They're about to. We can take a look actually at the Qs because I want to see what pre-market's showing. So pre-market's showing we're up a little bit. Again, playing into testing back up to these highs. If we can't get above here, if we can't get above the 200-day, it's bad news for markets. If we do, we're most likely going to have a nice continued rally into February, retesting the highs on the NASDAQ. So that's it for equities, guys. That's it for all of our market data. We did a lot of traditional market stuff today. But I'd love to hear what you all think down in the comments down below about all the stuff we discussed. Let me know if you guys have any points you want to make or things that I didn't cover that you'd like to see covered in the next video. But until the next one, guys, thank you all so much for watching, and I hope you all have a splendid rest of your day. Take care.